I don't think central banks can afford to let the gold price just fly, because that'll destroy their power. It'll destroy the system. So I think the central banks will announce a revaluation, make it look like they're still in charge, even if gold forced their hand.
Please join us for our next live stream Sunday, November 21st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, November 21st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you're new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up. We really do appreciate those thumbs ups. Chris Powell from the Gold Antitrust Action Committee joins us once again today. Chris was managing editor of the Journal Inquirer, a daily newspaper in Manchester, Connecticut, from 1974 to 2018, when he retired from his management work while remaining the newspaper's political columnist. From 2004 to 2009, he was the legislative chairman of the Connecticut Council of Freedom of Information and remains a member of the board of directors. In 2006, he was inducted into the Academy of the New England Journalists and today serves as Secretary-Treasurer and Director of the Gold Antitrust Action Committee, otherwise better known to you and me as GATA. It's time to saddle up and silver up for Chris Powell. Chris, welcome back to SBTV. How are you doing?
Oh, good, Pat. Great to be with you again.
Thanks again, Chris, for having some time with us once again. In August this year, a U.S. jury found two commodity traders guilty of manipulating the precious metals market by routinely making large spoofing orders. Given that GATA has been relentless in fighting and raising awareness of the occurrence of gold price rigging, how significant was this latest round of convictions? I mean, is it a positive step forward for the gold market or merely a formality for regulators?
Well, it's certainly good publicity for our issue, our clamor against market manipulation, Pat. But our bigger concern is manipulation by governments and central banks. I think the traders that have been prosecuted and convicted and even sent to jail may have been kind of piggybacking on that bigger manipulation by governments and central banks. I've always suspected that the big investment banks that trade the futures markets are trading not only for their own book, but they're trading for governments. And there's some pretty powerful evidence of that. So, as much as I welcome the attention to market rigging with the prosecution of the small traders, we've got bigger fish to fry.
Okay, we'll definitely touch on that in a bit. But in these electronic chat messages, which were presented as evidence, the traders were noted how they would basically brag about how easy it was to manipulate the gold price and that it was easy to game this stuff. Now, despite the convictions, has anything changed with regards to how easy it is for traders to continue to game the gold price?
In the structure of the market, I'd say probably not. It's just a question of whether the regulators are going to be more attentive to this. Now, certainly J.P. Morgan a year ago got fined $920 million for spoofing not only the gold and silver markets, but also the U.S. Treasury bond markets. And, that's a fair amount of money, $920 million. I suspect it is not as much as Morgan makes in a year rigging the markets. It doesn't get caught rigging. But there's a lot of ease to rigging the futures markets, just because there's not a lot of real metal involved. It's all paper and electronics. So I'm sure it still can be done easily. I suspect, however, that given the recent prosecutions, that the lower level traders may not be doing this as much as they used to. And the evidence of rigging we're seeing, I suspect, is more likely evidence of central bank intervention.
Okay, you mentioned Jamie Dimon, and in one of your recent dispatches at GATA.org, it was mentioned how Jamie Dimon, CEO, of course, of J.P. Morgan Chase, met with Fed Chair Jerome Powell back in late September this year. What do you make of this meeting, and why is this newsworthy?
It's not surprising to me that Diamond would have a private meeting with the chairman of the Federal Reserve. I think maybe what's a little surprising about it is that it apparently had to take place in person and not electronically on the telephone or by the internet. That suggests that something pretty sensitive was coming up. But the way the markets are going right now, Pat, and the constant interventions by the government, should not be so surprising that the chairman of the Fed would want to communicate intimately with a bank that often does the Fed's work.
You think J.P. Morgan also gets that added pass because back in 2008, Paulson really needed them to help mop up the mess there. So you think they get a little bit of extra leeway?
Oh, they already have gotten it extra leeway, Pat. I think the bank's been convicted of 5 federal felonies in the last 10 years, and it's still operating. Jamie Dimon is still out of jail. If you or I had done that, I think we'd be doing hard time. But here's a bank that's been convicted of 5 felonies, and there's really no penalty to it other than fines that the bank can recover by rigging markets for a few more weeks. So J.P. Morgan Chase has gotten plenty of leeway in recent years, and I'm sure it will continue to get leeway from the federal government as long as it is implementing federal government policy in the markets.
Yeah, I guess if Jamie Dimon was playing Monopoly, he'd always be able to pass that goal each and every time. No penalty for him. But Chris, for our viewers who are unfamiliar with how spoofing works, can you share with us how it works and what impact it has on prices?
Yeah, ordinarily, spoofing in the futures markets is the rapid placing and withdrawal of buy and sell orders so as to deceive other traders, especially other traders who don't have access to the technology that the spoofers have. This futures markets are often matters of microseconds in making and undoing trades. If you can enter and then cancel trades quickly enough, you can run circles around other traders. If you place an order that you don't honestly mean to fulfill, and you do enough of it, you can fake everybody out, and that's what spoofing's been about. The prosecutors and the regulators have shown that these trades were not genuine trades. They were meant to manipulate the market, and that's why they got convictions for it.
Yeah, I mean, because one would think that these should definitely be red flags to the regulators, but still, do you think it's being prosecuted enough?
Oh, probably not. I mean, if they look, the CFTC, the U.S. Commodity Futures Trading Commission, has undertaken in the last 20 years 2 or 3 investigations of the silver market. They said they couldn't find anything wrong, and then all of a sudden the federal prosecutors charged J.P. Morgan with rigging the silver market as well as the gold market and the treasuries market, and they get confessions and convictions and fines. Now, how come the CFTC couldn't find that in 2 or 3 investigations over 20 years? Obviously, the regulators, at least at the CFTC, are not really very competent. If they were serious, if they were using subpoena power, I suspect they might have found the silver rigging that the federal prosecutors did after the CFTC's investigations came up empty.
Okay. Chris, my company, Silver Bullion, over here in Singapore, is a regulated dealer in precious metals, and we routinely receive reports about how bank compliance is steering clear of certain businesses or customer groups for fear of the potential costs of fines from breaching regulations. Both these traders were trained by their bank, more than likely, on policies prohibiting fraud and deceptive trading practices. Chris, do you think the highest echelons in banks quietly allow this spoofing to happen, or do they actively ensure that spoofing by rogue traders do not happen?
Well, I believe in the case of the Morgan traders, Pat, the defense argued that the traders did their spoofing with the full knowledge of their superiors. I'm still waiting for that prosecution to go upstairs and take a look at the people who are heading the commodity desk at Morgan and even sitting in the CEO's office. You mentioned Jamie Dimon. Well, Blythe Masters was running the J.P. Morgan commodity desk when this spoofing was going on. The traders who were convicted said that, well, their superiors knew what they were doing. I suspect there's more investigation that could be done here, and I also suspect that maybe the federal government doesn't want to go farther up the chain of command at Morgan Chase for fear that it really will blow up the bank. So they've gone after some lower level guys and left it at that.
Yeah, I do know a banker who once told me he doesn't see anything wrong with spoofing. He called it a strategy, if you could believe that it's a strategy. But I mean, these spoofers, do you think they're considered heroes with within their colleagues, or do you think when they get out of jail, their convictions are done, they'll simply be rehired and maybe continue again?
Well, I don't know if they've lost their commodity trading licenses, Pat, or if they can get them back. Um, if the government wanted to let them back into the business as a reward for helping to corrupt the markets, that might be another scandal. I don't know, but certainly a few of them have gotten jail terms, and that's pretty serious. Even a 1 year jail term is pretty crippling event for somebody. So, my idea of justice isn't so much, putting the lower level traders in jail. It starts with exposing everything that's been going on and who's really been behind it and what government policy here really is. And we're nowhere near completion of that work.
Chris, I also understand that spoofing was only criminalized in the 2010 Dodd-Frank Act. Do you remember the circumstances that led to criminalizing the act of spoofing? I mean, was it specifically due to spoofing the gold market?
I don't think so. I don't think there was a lot of interest in Congress in the gold market back then. There's still a lot of criticism of Dodd-Frank now from both sides, from the banking side and from the public interest side. But I can't say what really prompted them to put the spoofing provision in. It's very possible that the CFTC knew this kind of stuff was going on, and it was basically something that was deceiving people. It was compromising the markets, and somebody mentioned it to Congress, and it got put in there. But has it been stopped? I doubt it. But I suspect that it's still going on. Only it's going on at the behest of the government.
Chris, are you in favor of more rules and stricter regulations to prevent the gold price from being rigged?
Well, I'd certainly favor more transparency in the markets. I mean, the CFTC has the trading documents. It knows exactly who placed what trade when. I don't know why that stuff shouldn't be public, especially for big institutions like the New York investment banks. All that stuff could be made public. I'm sure it would reveal a lot of dishonest things that were going on in the market. Now, of course, the investment banks would say that making the trading data public is going to expose and compromise their investment strategies. But I'm not sure that the investment strategies of the investment banks are the highest point of public interest in the United States.
Would the introduction of more and stricter rules hamper the functioning of the gold futures market to the point that it becomes, let's say, over encumbered or perhaps even uncompetitive versus foreign markets?
Well, if the regulations establish transparency, Pat, I think they would certainly diminish rigging of the gold price through the futures markets. But look, there's three key participants in the gold market who need to be asked certain questions. One of them is the Commodity Futures Trading Commission here in the United States. GATA and a U.S. representative from West Virginia, Alex Mooney, have put a key question to the CFTC several times over the last couple of years, and that is, does the Commission have jurisdiction over manipulative trading in the futures markets that is undertaken by the U.S. government itself or on behalf of the U.S. government through intermediary brokers? The CFTC refuses to answer that question, not just for GATA, but also for Representative Mooney. I think that gives the game away, that the futures markets are being manipulated by the U.S. government as a matter of policy, and that it's perfectly legal under the Gold Reserve Act of 1934, as amended in the 1970s. The Gold Reserve Act established the Exchange Stabilization Fund in the Treasury Department, and if you look up the Exchange Stabilization Fund at the Treasury Department's internet site, you find out that the Exchange Stabilization Fund has the legal authority not only to manipulate and rig markets in the United States, but to rig and manipulate markets anywhere in the world. This has been legal since 1934, and that the Commodity Futures Trading Commission will not answer any questions as to the legality of this market rigging by the government. I think that gives the game away. Look, I was in U.S. District Court in Boston in 2001 for the single hearing that was held in our consultant Reg Howe's lawsuit against the Fed and the Treasury and the Bank for International Settlements and some of the big investment banks about gold market rigging. And an assistant U.S. attorney the government moved for dismissal of the case on grounds of summary judgment. And that's a legal term that means that the government is maintaining that the activity that has been complained about in the lawsuit is perfectly legal and that there's no remedy in court against it, and so the case has to be dismissed. The government moved for summary judgment against Reg Howe's lawsuit of market manipulation in the gold market by the government, U.S. government, BIS, and the investment banks. I was there in the hearing on that case, on that summary judgment motion. An assistant U.S. attorney got up and said that the government had the full legal power to do everything in rigging markets that Howe's lawsuit complained of. And because the government had the market rigging power, the lawsuit had to be dismissed. The government in 2001 in that case acknowledged it had the power to rig the gold market and said it was perfectly legal.
Okay, so say the government is rigging the markets or the gold price. I guess an obvious question that I may have to ask here is, what's in it for them? Why are they doing this?
Well, they're doing it because gold is an international currency. It's a potentially, competitive currency against the dollar, the euro, every other government currency. If gold rises too much, government currencies will weaken. Gold is also a determinant of interest rates. Ordinarily, the gold price has an inverse relationship with real interest rates. If real interest rates are high, the gold price tends to be low. And if real interest rates are low, as they are now, really negative, the gold price tends to be high. This is all academically established in literature for many, many years. Gold is a determinant of currency values and interest rates. And that's why governments long have sought to control the gold price in order to maintain the strength of their currencies and the value of their government bonds. The rigging of the gold price by governments used to be done in public. I mean, that's what the London Gold Pool in the 1960s was about. That was an open conspiracy of 8 Western central banks to rig the gold price in London through the coordinated dishoarding of national gold reserves. This gold market rigging has a long and open history, except in more recent years, they've taken advantage of the futures markets because the futures markets, being mostly paper, not physical metal, are much easier to manipulate through the vast amounts of money that government can create and deploy in secret. But But this is an old story, the relationship of gold to currencies and interest rates. That relationship endures, which is why governments are still very interested in making sure that the gold price doesn't destroy their currencies and their bonds.
How much trouble do you think the dollar is really in then?
Well, look, the dollar controls the world. The dollar is the primary mechanism of U.S. imperialism in the world today. Nuclear weapons can only destroy the world. The control of the currency markets can control the world, can own the world. The control of the currency markets is control of the value of all capital, labor, goods, and services in the world. So, how much trouble is the dollar in? Um, it's in trouble mainly because gold is sitting there as the potential alternative to the dollar as the world reserve currency. Nothing else is going to do as a world reserve currency other than gold. It's a neutral potential world reserve currency. And the problem the central banks have is the imaginary gold supply now dwarfs the physical gold supply. There's estimates that there's 90 to 100 times more paper gold out there than there is real metal to back it up. If that is discovered, if people start converting their paper gold into real metal, then probably the gold price will explode and take the government currencies down when that happens. Now, is that going to happen today? I don't know. I know that any central bank with a large foreign exchange surplus that wanted to dump treasuries and dump dollars and buy a large amount of gold could explode the world financial system right now. I'm sure central banks are very scared about this, or certain central banks are very scared about this, and they're very vulnerable because most of the gold the world thinks it owns doesn't exist. I saw a story yesterday. I want to go check this again, but I think it expressed a little wonder that gold exchange traded funds were not increasing their inventories of gold even as the gold price was going up. If that's true, it could signify that investors realize that the exchange traded funds don't really have full ownership of the gold they claim to have, and that they are not good tools for gold investors, not good tools for people who are expecting the gold price to rise. If the gold ETFs were losing investment and the gold price was going up, well, that would show that maybe the world realizes the paper gold represented by the ETFs is not a good deal for them. That anybody who's buying paper gold, including the gold ETFs, in the hope of a rising gold price, is just throwing his money away. But if you buy real metal from silver bullion or anybody else, and you take it out of the banking system, then you're giving yourself a much better chance.
Thanks for the plug there. But but I think central banks. I mean, they can print all the fiat they want. They can go ahead and print it, but yet they hold physical gold in reserves. They're not holding ETF gold in reserves. I mean, they're not holding ETFs, are they?
Well, I don't know what they're holding, Pat, but they certainly do claim to hold physical gold. And there's been a trend in central banking for the last few years. We had many years in which the trend in central banking was to diminish their gold reserves, and the trend in recent years has been for central banks to recover their gold reserves. Now, are these gold reserves unencumbered, or are they leased out? How much gold do the central banks really have access to in their vaults? That's a fair question. One of the agencies that should be questioned right now, if you really want to know what's going on in the gold market, is the Bank of England, which is, really a custodian of foreign central bank reserves, and it's very much at the center of the gold market. It deals with bullion banks as well as governments. A few months ago, GATA asked the Bank of England if it had been involved in the gold leasing business in the last year. Had it issued or called in any gold leases? And well, the bank was was kind enough to respond to me, telling me to drop dead. Basically, it said that that information, I think they said, was not available, which was the polite way of saying they'd be damned before they told me how they were meddling in the gold market this year. Um, if you want to know what's going on, just put these questions to the government agencies that are involved in the gold market every day. The Bank of England is one of them, and the Bank of England is handling gold leases and swaps and things like that, along with the Bank for International Settlements. There's documentation showing they're in the gold market every day. For what purpose? Ask them. We do, and you won't get an answer. And I think that's a pretty good indication that they are involved in the gold market for reasons they don't want the markets to know about.
Chris, last time we spoke, we touched on Basel III, and fast forward to here today. I'd like to ask you, what is your opinion today on Basel III?
Well, I'm ambivalent about it, Pat. I always thought that if Basel III was going to get in the way of central bank intervention in the gold markets, the central banks would find a way around it. Supposedly, Basel III was going to make it much more expensive, prohibitively expensive, for bullion banks to trade paper gold. And indeed, both the London Bullion Market Association and the World Gold Council put out a public statement appealing to a agency of the Bank of England not to implement the Basel III regulations as they were written. They did get I guess it's Prudential Regulatory Authority in Britain to make some revision in favor of the bullion banks in that respect. I always thought that if the bullion banks found the paper gold trade made prohibitively expensive by Basel III rules, requiring the bullion banks to hold cash to offset their obligations in paper gold, then central banks could rig the gold market in other ways. They could set up their own offshore banks to trade in the gold market outside Basel III regulations. They could find some other intermediaries, I suppose, if they could even do it in the open. Though if they did it in the open again, as they did during the London Gold Pool, I think that would just destroy the deception that they need to control the market. Now, there are some experts, Alistair MacLeod of Gold Money and London bullion trader Andrew Maguire, who think that Basel III is having an impact, that it is slowly but steadily pushing the bullion banks out of the paper gold market, that supposedly the rules will take effect in London, I guess at the beginning of the year, and that MacLeod and Maguire think that the banks really are going to withdraw or severely reduce their paper gold business, and that they're already starting to do it. Maybe the recent increase in the gold price, the rise we've seen over the last couple of months is a function of this preparation for Basel III. But I'm not really convinced of it, Pat. If it happens, maybe we'll see it in a couple of months. If it doesn't happen, things will go on as they've been going on. But look, I'm optimistic that this rigging will be finally exposed to a wide enough range of investors and national governments that it will end. It is a dishonest system. It's an imperialist system. It's a mechanism for really exploiting the developing world out of its natural resources. Bad things like that do come to an end eventually. I don't know if I'm going to live to see that day, but they do this stuff in secret. They try to conceal it because they know if their rigging was exposed, if it was done in public, it would fail. And that's really been the objective of GATA all these years, is to expose it so that it would fail and we would regain free markets, not only in gold, but in everything else.
Yeah, speaking of central banks getting exposed and coming to an end, we saw Dallas Fed President Robert Kaplan, and then we also saw Eric Rosengren resign And then we had Randall Quarles, the Fed governor, announced he will also be resigning in December. Gotta ask, Chris, are the rats abandoning the sinking USS Federal Reserve?
Well, look, this is this is up to other countries and other central banks, Pat. Some people think the Basel III regulations were developed and put in place precisely because the European central banks, which have dominated the BIS, even though it still works for the United States, have wanted to stop the gold market rigging game because they knew it was being used to favor the U.S. dollar over every other country. Um, Now, we'll, I don't think the Fed's going to be destroyed, but I do think our current uh, system of central banking, as is shown by the private stock trading of those Fed board members, is thoroughly corrupt. It doesn't serve the public interest. It serves certain moneyed interests and certain banking interests, and that's really not. It's not a democratic system, and since it operates so much in secret, it's doubly totalitarian. Now that doesn't mean there shouldn't be central banks. I mean, look, I know a lot of gold people don't think there should be central banks. Think that there should be all sorts of private money, not just gold, but Bitcoin or baseball cards or whatever you want to use. Um, I don't go that far. I think though that central banking, to be decent and democratic and serve the public, has got to be fully transparent. And every month, the Federal Open Market Committee in Washington and the board of the Bank for International Settlements in Basel, they have secret meetings to determine the value of the money of the world, and in doing so, to determine the value of all capital, labor, goods, and services in the world. That's a totalitarian system. Let us in.
Gold used to be $35 through the Bretton Woods era, and today we have seen gold north of 2,000. Are there limits to suppressing the gold price? I mean, is it a case where they can only slow down its rise and that insane money printing will eventually reflect in higher gold prices?
Well, it's all a question of the ratio of money to the ratio of gold and new mining supply, Pat. Yes, they may not be able to keep it down forever, and they may be happy to slow gold's rise. But the rap against gold for 20 years is that its price has not kept up with inflation. Yes, the gold price has risen, but it has not risen as fast as inflation. And I'm sure the central banks consider that a great victory. They've maintained their currencies, even as they've been debasing them through inflation. They've maintained their government bonds, even though we have negative real interest rates, and they've kept the world from returning to gold. And I think they consider that a great success. It has had its costs. I mean, it's really exploited the developing world in favor of the developed world. It's really the same sort of thing that the Nazi occupation did in occupied Europe during World War II. The Nazis exploited occupied Europe not so much by sending the SS into the Louvre and stealing the paintings off the wall, which they did. The Nazis exploited occupied Europe during World War II by rigging the currency markets. They got control of the central banks, and they got control of the exchange rates, and they changed the exchange rates. And so all the production in occupied Europe flowed into Germany, and nothing flowed back from Germany into occupied Europe, and there was great privation and even starvation. The U.S. government found out all about that Nazi currency market rigging in a Defense Department or War Department newsletter, Tactical and Technical Trends, which I think was published in 42 or 43. It's on GATA's internet site. The U.S. government knows exactly how the Nazis exploited occupied Europe by rigging the exchange rates. Now the United States is doing that to the world.
So you think that the U.S. is on that path that we saw back in the mid 1930s with what they're doing with the central bank and the dollar?
Look, Roosevelt devalued gold precisely for inflationary purposes, to devalue debt. spur the economy by, giving people, more money, even though it wasn't worth as much. The U.S. economist Paul Brodsky and Lee Quaintance wrote a paper about 10 years ago hypothesizing that central banks were planning to do the same thing generally, that they needed to devalue their currencies and devalue their debt, and that the primary way for them to be doing this would be to upvalue gold, and that Brodsky and Quaintance thought that the central bank scheme was to hold the gold price down for a while so that central banks could acquire gold at a very cheap price and without exploding the market and disturbing other markets, and that at some point when they had enough gold, they would devalue their currencies in an international currency revaluation, and they would revalue gold upward so that whatever they lost in the devaluation of their currencies, they would recover through the upward revaluation of gold. They've done that before. That's what Roosevelt did. Other countries have done that. The Scottish economist Peter Millar wrote a paper, I think about 15 years ago, and this paper also is on our internet site, saying that a regular currency devaluation and an upward revaluation of gold was vital to sustain any kind of fiat currency system, because the fiat currency system, if it was debt-based, would eventually generate virtually infinite demands for interest payments, that interest payments eventually would devour the real economy. There'd be nothing to do with your money except, pay interest on society's debts. And so the Scottish economist Miller wrote that central banks had to devalue their currencies every once in a while and upwardly value gold in order to keep the debt under control, to devalue the debt. I think basically Miller and Brodsky and Quaintance were saying the same thing. Now, what they forecast hasn't happened yet. But currency devaluations and upward gold revaluations have happened before, and I rather expect that they're going to happen again. And I think that central banks are going to have to make it look like they're still in charge. I suspect this is going to happen on a Sunday night. The announcement will come from Basel or some other neutral location saying that central banks have agreed to another currency revaluation, and it will involve an upward revaluation of gold, and that this effectively will devalue society's debts and probably set us on the road for another half century of gold price suppression at a much higher and sustainable level. And I suspect that's going to be the most likely outcome. I don't think central banks can afford to let the gold price just fly, because that'll destroy their power. It'll destroy the system. I think they realize that they need a higher gold price, that the gold price is going higher anyway because of ordinary supply-demand situations and the exposure of paper gold. So I think the central banks will announce a revaluation and make it look like they're still in charge, and that what happened was really their doing, even if gold forced their hand.
Okay, and so you mentioned Nazi Germany and the U.S. is doing similar things. So is this the type of thing that they are doing similarly to what happened back in Nazi Germany?
Well, the Nazis were, far more candid about their ruthlessness and brutality than the United States is, and the United States isn't killing as many people as the Nazis were killing. But look, both empires were rigging the currency markets, and currency market rigging was the primary source of their power over their domains. That War Department newsletter examining the Nazi system of rigging the currency markets in Europe is posted at GATA's internet site. Anybody wants to see it, just write to me, cpowell@gata.org, and I'll send it to you, or I'll show you where it is anyway. Currency market rigging is really the most powerful tool of imperialism. There's a transcript of a conversation between U.S. Secretary of State Henry Kissinger and one of his deputies, Thomas O. Enders, that took place in Kissinger's office at the State Department in 1974, in which Enders explains to Kissinger that the U.S. has to keep the Europeans in the dollar system and prevent them from going back to gold, because that is the mechanism of U.S. power over the world. This transcript, which is on GATA's internet site, it's still at the internet site of the State Department historian, is a very candid admission of the U.S. policy of subordinating the world through maintenance of the dollar's dominance. I mean, this is all public record, this stuff. It's just, people don't want to see it.
Chris, you've always been out there fighting for all of us. Tell me, why doesn't mainstream financial news organizations or the media invite you on where you can simply pass on your info and let the people decide? I mean, why all the headwinds?
Well, this is a question that has been asked by our chairman, Bill Murphy, from time to time. The big investment banks are agents of the government. They're primary dealers in U.S. government securities. I mean, they are publicly agents of the government. And if you pick up the Wall Street Journal on any particular day, on page 3, there's a big ad from J.P. Morgan Chase. On page 5, there's an ad from Goldman Sachs. On page 7, there's an ad from Citigroup. On page 9, there's an ad from Morgan Stanley. And Bill wants to know how come GATA's done on the cover of the B section. Well, the press, the big financial news organizations are part of the financial establishment, Pat. They have close ties to the big investment banks, which are agents of the central banks. They have close ties to the government. Look, I saw a story this week that a government-owned company in China is trying to purchase the one independent English language newspaper in Hong Kong, the South China Morning News. Well, I'm not going to scorn that too much, because I think the New York Times and Wall Street Journal are just as much agents of the U.S. government right now as the South China Morning News is going to become an agent of the Chinese government. Look, it's big money, and government power is on that side, and they have co-opted most of the news organizations. So, we are stuck with all the internet news organizations, which are trying to be questioning the government, trying to be a little subversive of the financial establishment, and I think we're having some success thanks to operations like yours.
Chris Powell, before we wrap up, can you tell us about GATA and how to follow you, and what are you up to lately?
Oh, sure, Pat. Well, we're a nonprofit, non-stock corporation recognized by the U.S. Internal Revenue Service as a 501c3 educational and civil rights organization. So we're federally tax exempt in the United States. People can donate to us in the United States and get a tax deduction for it. We try to expose the rigging of the gold market and related markets, bring it to the attention of investors and countries and news organizations, so that perhaps it can be stopped and free markets can get rebuilt in the monetary metals. We've got a little support from the mining industry, but not much. I think on the whole, the mining industry is useless. It's too scared of its governments. It's too scared of its banks, and I understand that. But we rely on contributions from ordinary investors. We have a few people who've been very generous to us over the years and kept us going, but we do rely on support from the public. We put out a daily newsletter that tries to distribute stories of interest to gold and silver investors. People can sign up for that newsletter. It's free. Just go to gata.org and you can sign up for it and get our dispatches. And I think we've got about 8,000 people on our email dispatch list. We'd love more, and if people like what we're doing, we'd appreciate donations from them. But times have been hard in the gold business, and gold investors have not been making a lot of money in the last year. So, donations may be a little bit down for a while, but we're always hopeful that the truth's going to set you free.
Okay, Chris Powell, we thank you for your time. We wish you the best, and we hope we can do this again soon.
Thank you, Pat.
That was Chris Powell from the Gold Antitrust Action Committee, known as GATA. To know more about GATA and to help support their work, go to GATA.org. Audio-only versions of our interviews can be found on iTunes and Spotify, and please do share, subscribe, click to notify, and give us a thumbs up. It helps us to continue to do what we do for you.